to fill out the W-4 form in 2021 for a person who is head of household. What up? You got Mr. Smith, point 5 of Mr. and Mrs. Smith, and in this brief video I want to talk about filling out the W-4 for the 2021 tax year if you are a head of household. Now, when it comes to that W-4, it's going all digital now, and it's been that way for the past couple of years. So we use what's known as the tax withholding estimator. You don't have to get access to this through your employer. It's public information and readily available to you as soon as you tap into it. So basically all I did was go to the IRS website and locate it, but you can just type in IRS 2021 W-4 calculator, and this will pop up. You'll just click on it and it'll bring you to this page. So it's really simple and you access it here. But what it does is allow you to have an more accurate number. So when you're correcting your W-4, you can eliminate the fear of not knowing what to expect. But I will tell you this, the more truthful you are with the software, the more truthful and accurate the information will be for you. So this is what you have to understand right here where it says before you begin. This is important. Very important. Gather the most recent pay statement for yourself, and if you're married, for your spouse too. So your check stub, you want to have your most recent check stub because accuracy is going to be key. Gather information for other sources of income you may have. So if you have other sources of income, if you're receiving some type of pension, some type of dividends, you want to have that available too. In this example, we won't be using any other forms of income other than a job because many times that's what most people are using. But if so, make sure you have it here because it will be asked if you have other forms of income in here. So they want you to have everything, especially if you want the end result to be an accurate one, more of what's likely to happen based on your scenario. And the last check, have your most recent income tax return handy because there's some things that may happen on there, like whether or not you qualify for the earned income credit, whether or not you qualify for the child tax credit. That could be helpful. In this example, we won't be using it, so some people don't need that. But if you think you may qualify for the earned income credit, child tax credit, or if you know you did last year, then that information can come in handy as well. So that's it for the checklist. But what we want to do is go ahead and scroll on down. And this is just kind of giving you a heads up of things that what you will be asked, but I won't go over it here because we'll have an opportunity to do it right here. So basically, once you go here, tax withholding estimator, it's a 6-step process about you, income and withholding, adjustments, deductions, tax credit, and your results. So use your best estimates for the year ahead to determine how to complete Form W-4 so you don't have too much or too little federal income tax withheld. That's why you want your numbers in front of you so you don't have too much, which many people have too much withheld, or too little, which many people are terrified of owing or having to pay in. So, you know, you want to make sure you find your medium that works for you. Now, about you. Select the information that best describes how you anticipate filing your 2021 tax return. Filing status, number 1. What filing status will you use for your tax return? And if any time during the filling out the W-4 form process you get caught up, they always have this question mark that elaborates on the item that's being discussed. And I won't open them all up, but considering this one being the head of household one, I wanted to open this one up so I can show you what head of household is, because many people get this one twisted, and they have been for years. But hopefully if you've been listening to us for any amount of time, you know what head of household is. So let's dive into it. Head of household. Generally, you may claim head of household filing status on your tax return only if you are unmarried and pay more than 50% of the cost of keeping up a home for yourself and your dependents or other qualifying individuals. Now, the thing I want you to notice about this, number 1, you must be unmarried. Rule number 1, you cannot file head of household if you are married, and this includes if you're married filing separately. Unmarried is the key to this. A lot of times people feel as though they're married and their husband is the breadwinner or the wife is the breadwinner, then whomever's the breadwinner is the head of household. No. This is for a person who is unmarried, aka single, but they also have dependents. and they pay more than 50% of the cost to keep up the home for themselves as well as the dependent or qualifying individual. So qualifying individual could be a nephew, a family member, a parent, a sister, a sibling. As long as they're not filing themselves, they qualify for being carried as a dependent. And even if they did file taxes based on their scenario, if you're covering more than 50% of their expenses of the home that they reside in with you, then by all means, they can be classified as a dependent. But head of household is unmarried and you have a qualifying dependent. Many times that'll be your child. So in this case, for the filing status, we'll say head of household. And I won't spend too much time outside of what I just did there because I want this to be straight to the point. If you're literally filling out your W-4, I just want to educate you as we go through this. So head of household, may another taxpayer claim you as a dependent on their tax return? No. If you're head of household, hopefully nobody can claim you as a dependent. 205, dependents. How many dependents do you anticipate claiming on your tax return this year? In this example, I'm going to use one, but if you have multiple, then you fill it out according to your situation. 305, income. Do you or will you hold a job this year with paychecks from which federal income tax is regularly withheld? Yes, federal income tax is coming out. How many jobs do you expect to have this year? Include jobs you no longer have, that you no longer hold. In this case, we're going to say one, but basically what they're saying, if you're filling this out and it may be May, and you had a job that you no longer have now, earlier this year, then they want you to not only include your current job, but also the job that you already had earlier this year, because when it's time to file taxes after this year is over, guess what? That other job is also going to be on your tax filing, so they want you to also make note of it here. That way your number can be more accurate. This is all about creating an option or the ability, an opportunity to have an accurate W-4 so you can determine what's going to be the best strategy for you. 4 or 5, pension. Will you receive income from a pension this year? We're going to say no in this case, but you should know if you're receiving some type of pension or basically some type of retirement money along with you having a job. Other sources of income and tax payment. We're going to leave this one blank, but just read over them, hit the question mark if you have to determine if you will receive some other type of income and or tax payment. Demographics. I will be 65 or older January 1st, 2022. No for this one and no for the I am blind, so all we have to do is hit next. We don't have to do anything else. Do you expect to hold this job the entire year? We'll say yes, they will. We don't plan on getting fired or losing the job anytime soon, even though we know that having a job can definitely present that opportunity because nothing is guaranteed if we didn't learn anything from the previous year. How frequently are you paid? In this case, we're going to say this person is paid twice monthly. Twice monthly can be the 1st and the 15th, 5th and the 20th. Every 2 weeks will be every other Friday. So it's a difference between the two. Know the difference. If it's 2 specific dates, numerical dates, that's twice monthly. If it's every other Thursday or a certain day of the week, that's that's every 2 weeks. So know the difference. On what date did your most recent pay period end? On this example, we're just going to put it ended on the 1st. That was the most recent pay period that ended. Enter the total wage you expect to receive this year. We're going to say the total wage that you expect to receive this year is $32,000. Since I already had it in there, let's just keep that. Enter any bonuses. Have you already received this year? Expect to receive this year. We're going to say this person doesn't expect and hasn't received any bonuses. We'll leave it at that. Use your last pay statement to enter the federal income tax withheld. So on this one, we're going to say that the federal income tax withheld was $84.75. Per pay period, we're going to say $84.75. Now, if this is the first W-4 that a person is filling out for this year, these numbers will be identical. Year to date is typically higher than the pay period because it's the cumulative amount of taxes that was held for the whole year. So this is the only time these numbers will match. Outside of that, this number will double and then, triple, and, it'll just go from there. So in this case, both numbers do match. We're going to leave it just like it is. Did you or will you contribute to a tax-deferred retirement plans such as a 401k, etc. You can hit the question mark to see if that's something you'll contribute to. And many people contribute to the 401k. So if you do, make sure you hit yes and follow the other steps according to that scenario. But in this case, we're going to say no, set it for no, just for the sake of simplifying the process. Did you or will you contribute to an HSA, FSA, pre-tax child care, credit account, or other cafeteria plan? We're going to say no on this one as well. And we're going to scroll down, hit next. Adjustments to income. Most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. I was going to say tax liability. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? On this one, I will click to see possible adjustments. But let's click on this right here. Adjustments to income. You may qualify for certain adjustments which reduce the amount of your taxable income. If you are not sure that you are eligible for any adjustments, select See Adjustments and browse the help tips for the adjustments used. So a lot of times people skip over this. But truth be told, if you have some things that can offset your income, that's a good thing because that can bring in more cash flow. We teach people all the time that if you have a home-based business, you can legally increase your cash flow because that's an adjustment to your income. If you want access to one of our home-based businesses or the home-based business that we recommend that teaches you financial literacy, helps you better your credit, click the available link below and you should see the option to get access to a make money opportunity, an income opportunity, something that you can start rather inexpensively, but can position you to earn income and position you to keep more of your paycheck at your job. So let's go ahead and click on See Adjustments to see what options are here. Student loan interest deduction, education expenses deduction, or educator expenses deduction, deductions from contributions to an IRA, health savings account, moving expenses, alimony paid, penalty for early withdrawal of savings, certain business credits for reservists, performing artists, fee-based government officials. So this one right here can be pretty loaded, especially if a person is a business owner and they frame it up in ways that may not seem like it fits you. But if you unpack this a little bit, you may very well qualify for this and allow yourself to take in more of your cash flow from your job. But in this example, just to keep it simple, we're going to hit next, and this person does not fit that description. All right, it says you qualify for a standard deduction of $18,800. Now, this is based on them being head of household. If this person was single, it would be different. If this person was married, filing jointly, it would be different. If this person was married, filing separately, it would be different. So based on this particular scenario, this person who is head of household has a standard deduction of $18,800, meaning that it offsets their income by that amount. So instead of them getting taxed on what number did we choose? 32,000. Instead of them getting fully taxed on 32,000, they'll be taxed on 32,000 minus 1,800. So whatever that is, whatever that number is, 14,000. They'll be taxed on about 14,000 if we use 32. I don't recall, but you're watching the video, so you know what we use, and that helps you. So this standard deduction has been put in place to benefit working employees. However, you can even make that number even lower if you implement what I talked about on the previous screen. Now, in this scenario, it says deductions reduce the amount of your income subject to income tax. That's a good thing. Most taxpayers take the standard deduction. Would you like to take the standard deduction or itemize your deductions? And they always do that, and I love it. I love them for it. Most taxpayers do this. They're trying to nudge you subtly in that direction, because if you do what most people do, you will pay more taxes like most people do. So they nudge you in that direction, but if you understand a little bit more, then you'll try to see if it's a way that you can qualify for more tax deduction. Now, in this case, I will say this. Most people do just roll with the standard deduction, because when it comes to itemizing, the options are more limited than if a person had a business. And if that number, this itemization number is not more than this 1,800 or whatever that number shows up for you, then it's not even worth itemizing. So many people think they're itemizing just because they give charitable donations or they give tithes and offerings. But if that number doesn't equate to more than what your standard deduction is, it really didn't count for anything. So just keep that in mind. So let's see what's on the list of itemized or potential itemized deductions. Medical and dental expenses. It may add up to over there. So, consider it. Taxes you paid. And then, taxes you paid will be broken down on what type of taxes they're talking about. And you see the list right there. Qualified interest that you paid. And you can click on it and see if you have something that qualifies. Gifts to charity. Casualty losses. Other itemized deductions. Now, that's a broad topic. So it sends you to an actual area, a code, so you can see what might fall into that category. If your itemized deductions are less than your standard deduction, the calculator will use the standard deduction. So they're basically saying what I just said in a different way. If your itemized deductions don't equate to more than the standard deduction, it don't even matter. It's not even significant. So just so you can understand that. Tax credit. Based on your inputs, you qualify for a tax credit for your dependents. Tax credits are amounts you subtract directly from your tax obligation. Do you want to learn more or finish and get your results without tax credit? We're going to say we want to see tax credits. So, child or dependent related, and we'll leave all of these blank. So we're going to open up the child or dependent related because we're not dealing with the foreign tax, educational, retirement, saving, homeowner, elderly, or disabled. Business, we're not going to tap into that on this one, but there's definitely some opportunities there. Child or dependent related. You stated that you have one dependent. If this is incorrect, please return to step 1. That's correct, so we're going to keep that. Child tax credit. The calculator will automatically determine the number over 16. Enter number of qualifying children under 17. 1. So this child is under 17. Child or dependent care tax credit. Select number of qualifying persons. This is for a person who is paying out of pocket for daycare. Out of pocket. Not some type of incentive, or if you are using an incentive, it's going to tell you to subtract the part that you're actually receiving payment for. So be mindful of that as it relates to if you are not paying for it fully out of pocket. But if you are, and that child is being taken care of while you're out looking for a job or out actually working your job, then by all means, you will select that. In this case, I won't select it. Enter an estimate of your work-related child and dependent care expenses. So if you did yes on this one, or you selected an amount, you will enter an estimate of your expenses. Then earned income tax credit. Select the number of qualifying children. Select the number of qualifying children if you get an earned income tax credit. And this is something that you will base on these criteria. So basically, you'll know if a person falls under this umbrella. And it says qualified child is son, daughter, stepchild, foster child, and it's a host of other things. But most people can qualify for this based on their income. So on this, we're going to say earned income tax credit falls under a qualifying child. And then we'll leave that part blank. So we just have 1 right there where it says enter the number of qualifying children. And for the earned income tax credit, if that's something you have qualified for, then you would just select 1 there, or however many children fell under that umbrella. And then it takes you to your results. Estimated overpayment. So it basically says your estimated overpayment is $2,040. Now, if you do not change your withholdings, you are likely to get a refund. So this is the results. So many people wonder, okay, will I get a refund based on me filling out the W-4? If you make no changes at all, this is likely to be your refund as long as the information you input was accurate. And then it states, happy with your results, then you don't need to do anything. Want to adjust your results, do this. It tells you to use the slider below to select the approximate refund amount you'd like to get. So it allows you to control your refund amount. Not everybody wants to get a refund, believe it or not. So if you are like the person that says, you know what, I don't mind getting some of the refund, but I want to get some of that money throughout the year. Let's cut it in half. And I want to get $1,000 refund, but I want to keep $1,000 throughout the year, whatever that looks like for you. So that's, probably a little bit over $100 extra a month The extra $100 a month can go towards investing, can go towards paying down debt, can go towards saving, can go towards reinvesting into some type of business. But you were able to control it. So now what it says, if you make that adjustment, it says, look, for a refund of approximately $1,000, your job, annual pre-tax wages, or it says $32,000, that's the amount we use, to get your desired refund amount, you will need $38 withheld from your paycheck, $47 less than your current tax withholding. So you'll be getting $47 back into your paycheck, almost $50 a paycheck, almost $100 a month that can be put into the things that I listed. What if you said, you know what? I don't want to refund at all. I want my whole $2,000. Well, in this case, we can't get the whole amount because you have already paid in some taxes, but we'll shift it to the next amount available. Boom, right here. It says to get your desired refund amount, you would need $0 withheld from each paycheck, $85 less than your current tax withholding. So now you'll be bringing in an extra $170 per month, but you don't need to expect getting a refund unless you have some other things to offset your tax liability, like a home-based business. But in this case, now you're bringing in an extra $170. For many people, that's enough to get them in a better space financially, pay off some debt, save more, invest more, get their credit in order. So understand that it's a strategy. If you plan to use this form to bring in more cash flow, do not do it without having a strategy or a game plan of what to do with the money. This is not you getting that extra money just so you can blow. Preferably, we want you to be using it to apply towards something that can make your future years better than your current year. So that way, a year from today, you're better off financially because of the decision that you made, not worse off financially because of the lack of discipline that came along with making this decision. So that's pretty much in a nutshell. A person who is head of household, once you get to this page, you can scroll all the way down to the bottom, print off these results for your records, and basically you can print off a pre-filled out W-4. So it says how to adjust the W-4. It tells you how to adjust it based on what you put in. But prior to that, if you, let's say you didn't want to change anything, and it may have removed it altogether of what I was going to put, but it had a spot where you can print out a pre-filled out W-4. Let me see if I can relocate that, how to adjust the W-4, boom, boom, boom. And if not, it tells you how to fill it out, tells you what to put on line 3. So when you get this W-4, you click on it, you print it out. It may already have it on there, or you may just have to fill it in with your information. Pretty simple, short and sweet, straight to the point. Just wanted to add another W-4 video for a head of household because we know many people can benefit from this video. Hopefully that helps. Let us know if there's any other examples that you would like for us to go over, and we'll gladly do it, or I'll gladly do it. That's all I got for this particular video. Mr. Smith, 0.5 of Mr. and Mrs. Smith, signing out.